We got some more earnings, and we got some more tech, more with a focus on personal devices and office supplies. HPQ out in the aftermarket. George Tsilis joining us to talk the stock, as HPE is a little bit more interesting from the server and the growth standpoint, George. But old Q, it's still showing some top line growth. It might be small, but it's there at least.
Yeah, I mean, if you look at the overall print, it was not bad considering the estimates, which were actually, I was surprised to see them expect to be down about 8.5%. They actually came in line when it comes down to earnings at 74 cents, but that was still down from 81 cents compared to the same quarter last year. So that was down about 8% or so, or 8.5%. If you look at the top line sales, it did beat the estimates just slightly. 13.5 billion versus 13.35 billion. So we're just basically, splitting hairs here by about $150 million. But irrespective of that, it was higher by about 1.3%. And look, I think there's still room for, traditional imaging and printing based hardware. We always talk about hardware as GPUs and artificial intelligence aspects that NVIDIA and companies like AMD provide. But I think there's, potentially some room here for PC cycle refresh. If you consider that imaging and printing, particularly the printing segment for HP has been relatively stagnant, but its PC division, again, is also, a component of their top line sales. That actually might be fruitful going forward, considering that folks are probably going to have to upgrade at the very least, considering going back to, mid 2020 when a lot of folks upgraded their PCs because of work from home. This may be a cycle upgrade for companies like HPQ as well as Micron in the DRAM space.
Okay. George, is there obvious evidence of a cycle turn? Because it seems like the visible future analysts are looking for basically more of the same, like low single digits.
Yeah, I mean, that's what you have to expect with HPQ in terms of mid-single digits. I mean, if you just look at the last year in terms of sales, they were basically flat. But, flat sales and earnings growth will get you essentially a mid to high single-digit earnings estimate or multiple or PE ratio, however you want to look at it, and it's trading around 9 times forward earnings. So it's already trading relative to basically flat growth in terms of sales and earnings, at the very least in the low to mid-single digits. I think the expectations for this company aren't necessarily growth. It really comes down to value and income. They do produce sufficient income to satisfy their dividend, which is approximately $1.16 per share. If you look at the earnings estimates for fiscal year 25, as of prior to the reported earnings, it's around $3.59, 2026, $3.75. So for what it's worth, it's not the greatest amount of top line sales or even earnings growth for this business, but it's not a bad business if you consider it as an investment. You have to just be wary of the fact that it's more of an income investment versus a growth story. But, again, based on the demands for artificial intelligence, a lot of the old CPUs, and this is just CPUs or computers in the past 2 to 5 years, may be antiquated considering the demands that artificial intelligence has on computing power.
That seems quite true. All right, appreciate it, GT. Thanks for the look at a sleeper that has actually been finding some ways to grow, even in a tough market. Thanks, George.